Any clue why the futures just had that massive pop about 30 minutes ago?
A lot of technical movement here at 2,900 in the S&P 500. Those futures market, 29.05. That was the target. So I think when you see people feeling left out of the market, there's a little bit of enthusiasm coming into expectations for the banks today. Boom, they came and buy it. A lot of stops were executed. Now all of a sudden it's trading 29.05, 1% away from the all-time highs, Sully.
Yeah, I know you're doing the math this morning. It's too early for that. But here's the thing. I mean, and not to throw water on it, I get it. It's a nice number. Futures right now, a little thinly traded. Certainly these bank earnings do have the power to move markets, do they not?
Agreed. And a lot of people are having high expectations. Look at the banking sector. JPMorgan, Wells Fargo in particular, has really been laggards for the year. You're seeing them drag. You're seeing the XLF. That's the broader swath ETF that we like to utilize for the banking sector, and that has been dragging the S&P 500. So I think there's high expectations. We're really focused on the forward guidance because at the end of the day, Sully, when you see the valuation of these stocks, and yet you can say it's fully priced in here at 2,900 in the S&P 500, I think you have to consider where are the interest rates. You talked about the 10-year note being at 2.52%. That really justifies the lofty valuations or the stock price itself.
You know, we're going to use and abuse you later on in the show, bring you back to, I don't want to get too much of a deep dive on rates now. We'll do that in a bit. But how much have these lower rates maybe caught investors off guard? Because it's sort of a general thought that the big banks benefit. They do a little better when rates are a little higher because their NIM, the net interest margin, ticks up.
Well, I think the banks are doing fine by and large because the short end of the curve is higher. But the longer end of the curve, which has really seen folks come in and buy, and there's a lot of reasons why. There's some anxiety in the market. You're seeing in comparison to other offerings out there, look at the German Bund, that 2.5% is still pretty juicy, Sully. But at the end of the day, I do think that the banks are positioned to grow here. The forward guidance, the potential movement of the U.S. dollar, I don't think the U.S. dollar moves anywhere. The Federal Reserve, it's been articulated by President Trump, by the Federal Reserve, that we are going to be patient, more patient than ever. And that movement, that exact contrast of where they were in early December, I think that is really coming to the banks' play. So we will see what they actually report today, but I think they're going to be better than expected. And to your point earlier, that bar is really low right now.
Yeah, it is. And so if any of our viewers like what you have to say, they're a believer in the banks, the financials, is there an ETF they should be looking at?
I like XLF. It's a broader swath.
That's the big one, baby.
That is a big one. But if you look at the two earnings we're having today, JPMorgan, Wells Fargo, those two are in the top 10 holdings of that ETF and make up nearly 20%. So, yes, if you have a certain opinion on a specific stock, God bless. We have a lot of earnings coming out the next 4 days. But I think the XLF allows you to participate in that broader swath because the XLF is dragging in comparison to the S&P 500, and that could really reverse next 4 days.